In today's session, I will take you through two important circulars which are recently issued by MahaRERA, the circular number 39 and circular number 40. Circular number 39 was issued on 28th December 2021. As per this circular, if you see the subject, submission of certificates to the scheduled bank operating the separate account and copies thereof to MahaRERA authority. See, in this certificates what they are referring to is Form 1, Form 2 and Form 3 which are relating to architect, engineer and CA certificates. These forms earlier they were always submitted to MahaRERA authority. At the same time now they made it mandatory for the promoters or developers to be submitted to banks, scheduled banks where the designated account, that means 70% account is maintained at the time of withdrawal of money. We will just see the summary, read the summary and we will go to next circular. See here, if you read the summary of this circular, in view of the provisions of the Act, the rules and regulations made thereunder referred to herein above, promoter henceforth shall submit the said 3 certificates to the scheduled bank operating the separate account at the time of every withdrawal. Whenever the money is withdrawn from the bank, you are supposed to, promoter or developer is supposed to submit these 3 forms. Every withdrawal from the separate account, irrespective whether such real estate project is a new project or an ongoing project. Irrespective of ongoing or new project, till the occupancy certificate or completion certificate, as the case may be, in respect of the said project is obtained and the copies thereof shall be submitted online by the promoters to MahaRERA authority. Earlier, always these forms were submitted to authority. Now they wanted these to be submitted to the bank also at the time of withdrawal. Earlier, few banks used to ask for this and few were not insisting of these forms. However, now they have made it mandatory. Henceforth shall be submitted. That means it is mandatory to be submitted. And this circular shall come into force with immediate effect. It is issued on 28 December 2021 and they have made it with immediate effect. So, from that date, these 3 forms have to be submitted to bank. Now, we will see what is circular number 40. Circular number 40 is issued on 14 January 2022, 40/2022 circular number. Here, disclosure of information in public domain. They are saying that certain information has to be made publicly available. Earlier, these were not made available to the public. Now, they wanted these details to be available to the public. Let us see what are the details which to be made available to the public as per this circular. See, one is form number 1 being the certificate issued by the project architect. This has to be made publicly available. Earlier this was not available to the public. Now they wanted it to be available publicly. And form number 2 being the certificate issued by the project engineer. And form number 2A being the certificate issued by the engineer, that is the site supervisor, which is be submitted at the end of every financial year. Okay, this is at the time of withdrawal. This is also withdrawal. And form number 4 being the certificate issued by the architect on completion of the project. This is after completion of the project. And form number 5 being the certificate containing the annual report on statement of accounts issued on the letterhead. This is the annual report. This is also at the end of the financial year, not in between. And disclosure of sold, booked inventory, building wise in the project. This information, it is available on the face, but they have made this certificate also to be made and be available on the website. And report from SERSI from this particular website, that also have to be made available. Declaration about commencement certificate. If the commencement certificate is already available, even otherwise they are saying it should be made available. Okay, now if you see this applicability of this circular shall be considered to have come into force with effect from 22nd December 2021. If you see the date of the circular, it is 14th January 2022, but they have made it applicable from 22nd December 2021. So whenever any amount which is withdrawn after 22nd December 21, this has to be uploaded. These forms have to be uploaded publicly on RERA website and also have to be submitted to RERA authority, which were earlier following. Now they have prescribed new formats from form number 1, 2, 3. Now we will see what is the revised format for form number 3 in detail. Form number 3 is, form is old form only, there is no new, it is not a new form, but they have changed the format of form number 3. This form is issued by CA at the time of withdrawal of money, or it is issued on quarterly basis for the submission to the MahaRERA authorities. Now this form has to be mandatorily given to bank, which is referred in circular number 39, which we just saw. So let us go through in detail what is the new form. So now form number 3 with the date of issue, and to whom here the CA will issue to some promoter. Here promoter details will come to so and so promoter and address and all. Then subject certificate of financial progress of work of so and so project having MahaRERA registration number so and so as at. So this, if this form is issued for 31st December 2021, then here 31st December 2021 date will be given. This certificate is being issued for RERA compliance for the project so and so having MAHA registration number so and so being developed by so and so promoter. Project name will be different, promoter will be different. So they are covering here both, and is based on the records and documents produced before me, explanation provided to me by the management of the company. When you come to the form as such, they have made it in 4-5 tables. Table A, estimated cost of the project at the time of registration of project. So this earlier, if you see the old form, when you compare old form and new form, there were 2 columns, estimated column and actual column. Now what they have done, they have changed the format. First all the estimation details will come in different tables, then actual cost will come different tables. Otherwise, broadly, all the details whatever is being sought here is same as existing form only. I mean earlier old form only, but here they have changed the format little bit. Otherwise this table is same, the data requirement is same. So I am not going in detail for this description and all. It is the same table, but it has to be given in first estimated then actual. We will see down the line. Next, coming to this is total land cost is over. Now development cost, cost of construction of building. So here again this column is of estimated column. So as at the beginning of the project, whatever estimation is there, that details have to be given here. So now it has come total cost of the project. So land cost and development cost, then total cost of the project will come as per estimation. Now table B. If you see table B, it is actual cost. Earlier this actual cost column was there in the next to the estimated column. Now they made it different table below. So as on date of certificate, what is the actual cost? Otherwise the details sought are one and the same, value of the land. So here also we have first what is the land cost, actual land cost of various line items, the total, and next construction cost. Then total development cost will come, then total cost of the project actual incurred. So land cost, actual land cost and actual development cost, these two put together we will get total cost of the project. Now coming to proportion of the cost incurred on land cost and construction cost to the total estimated cost. These percentages also were there earlier. The same thing is being sought here. Amount which can be withdrawn. So based upon this percentage proportion, what is the amount that can be withdrawn and what is the withdrawn amount as on that date of certificate, and what can be withdrawn further. And here they have clearly mentioned that pass-through charges like GST, input credit, if at all, if anything is there, that should not be considered in the total cost. This is good, well and fine. Now, what is the major change in this particular form is this particular details. See, earlier these details were not there in CA certificate. Now they have included these details. That is table C, statement for calculation of receivables from the sales of the real estate project. Earlier these details were not required to be given by CA. Now they have included this particular table here. This is the major change which is compared to previous earlier old format. Now here sold inventory, whatever number of units are there, that has to be given. Please remember, this is with respect to one RERA registration number. So how many units are there in that? How many out of the total units, whatever the units are sold, this is sold inventory. So we have to give serial number, flat number, carpet area in square meters. Here as per RERA, carpet area we have to give here as per RERA carpet area, and unit consideration as per agreement or letter of allotment. If agreement is not done, as per allotment letter, what is the consideration and what is the received amount and what is the balance receivable. This data, earlier it was not there in CA certificate, now they have included this data. This is the major change. Entire this table is new in the CA certificate. Now coming to next table. Here they are specifically mentioning that it should not include the taxes. In the received amount, it should not include the GST amount. So it is amount received against agreement value other than other charges has to be taken here, and the agreement value is always excluding other charges. So this column also will be excluding other charges and GST, and this column will also be excluding other charges and GST, and balance receivable will be here, and total of these columns. And coming to next unsold units. So suppose we have 25 units in particular project, we have sold 16 units and balance 9 units will come under unsold units. Here if you see unsold units, serial number, flat number, carpet area is again as per RERA, carpet area in square meters, and unit consideration as per ready reckoner rate. So whatever ready reckoner rate is available in that particular location, we have to take that carpet area and respect to ready reckoner rate respect to carpet area, and we have to arrive at unit consideration, which will be expecting the sales of that particular unit. See, nobody can sell less than the nobody will sell, ideally nobody will sell less than the reckoner rate. It will be either equivalent to reckoner rate or more than reckoner rate, but here department is saying you calculate the expected sales revenue for the unsold units based upon the ready reckoner rate and arrive at the total. So we will get total amount expected consideration. Now this is table T. This was also not there in earlier format. Now this is the additional requirement in the new format. Here table T, comparison between balance, cost and receivable. This gives the total gist. This is very crucial information for any outside party. See, here they are very specifically asking estimated balance cost to complete the real estate project. Difference of total estimated project cost less cost incurred. If you see in this first table, we have given what is the total estimated cost and what is the actual cost incurred. So, if you subtract estimated actual cost incurred from the estimated cost, that will be the figure will come. That means out of 10 rupees, I have incurred 5 rupees. So balance 5 rupees I am supposed to incur. And coming to next point, balance amount of receivables from sold apartments as per table C. Above we have given the details of balance money to be received. See, if you see table C, balance receivable. That means agreement value is this, received amount is this, balance is the amount that I am yet to receive from the customers. So from that balance, whatever total comes here, so that is the total amount which I will be receiving in future from my customers. From my customers, that figure will come here. And third point is balance unsold area to be certified by management and to be verified by CA from the records and books of accounts, and estimated amount of sale proceeds in respect of unsold units. See, this particular unsold value as per ready reckoner, we are taking from this particular table. If you see, this is the unsold inventory which we are arriving at the consideration based upon the ready reckoner. That figure will come in the 3-2 estimated amount of sale proceeds. Here it will come, that amount will come here. Now, estimated receivables of ongoing project. So, total how much I will receive is what is balance receivable in table C from sold inventory and estimated sales of table D unsold inventory. So, those two if I add, then I will get the figure here. What is the net receivable, total receivable from sold, and what is the total receivable from unsold? That will be the total amount that I will receive in future from this project. Now, estimated receivable of ongoing project, that is 2 plus 3-2, this one. 2 is balance receivable and 3-2 is estimated from unsold inventory. That total will come here. Then fifth, what it is telling, fifth is very important point. If 4 is greater than 1, 4 is balance receivable from the project, either from sold or unsold units, then 1 is what? The balance cost to be incurred in the project. I have estimated the cost this much and I have spent this much and balance is so much. So that figure to be compared with figure in the fourth row. So if 4 is greater than, that means my balance receivable is greater than 1, that is balance cost to be incurred, then you deposit only 70%. If you see fourth next point, if 4 is lesser than 1, then 100%. So if your balance receivable from the project from sold inventory plus unsold inventory is more than balance cost to be incurred, then you deposit only 70% of your sale proceeds. If your balance cost to be incurred is more than the balance amount to be received from sold and unsold inventory, then your cost is more than your future receivables, then you have to deposit 100% into the designated account. This is very important. So by default you have to deposit entire 100%, not 70%. And here they are asking for the designated bank account details. At the beginning, this has to be considered right from beginning. Opening balance, here they have mentioned from start of the bank account to till date. So whenever you have started that particular designated account, from that date to till date, you have to give the summary. What is the opening balance, what is the collection, and what is withdrawn, and what is the closing balance. This closing balance has to match with your bank statement as on the date of the certificate. And CA will verify this and he will give this particular certificate. And the last table, which is another crucial, is that means of finance. From where did you draw this money, whatever you have spent, either from your borrowed fund or own fund or customer project. So that summary also has to be given here. This particular certificate gives outside agencies complete information about the project with numbers, with progress, everything. So this is very crucial decision which MahaRERA has taken, because in the present scenario the projects are getting delayed and they are getting stretched, and because of their lack of funds and all. So this is the latest circular which MahaRERA has issued with changed formats, and this is giving complete information to banks and also to customers. So it is very important change which has been taken by the MahaRERA, and it is very useful to customers as well. Now if you see the last part of the certificate, here company is also signing and chartered accountant is also signing. So both are agreeing to the numbers. So it is from verification of the records produced to the CA. So these changes are very important. Please go through. If you require this soft copy of this form, you can mail me. I will reply to your mail. Thank you.